Thanks, Tim. Great to be here on Share Cafe again, and happy Friday to all of our viewers today. I'm delighted to be able to provide an update to the Share Cafe wider audience to talk about the developments that are occurring in our Beetaloo Basin properties, where we are very focused on getting into early commercial production, utilising existing pipeline infrastructure in the next couple of years, following which our assets set and those of our neighbours in the basin have ample opportunity for significant global scale LNG infrastructure build out. Turning to our first slide, which gives you a bit of a corporate overview of our company. As Tim mentioned, we're listed on the ASX. Our market cap's around $150 million. We are very well funded for our current ongoing work program that I'll step you through shortly, which is focused on drilling horizontal appraisal wells as part of our goal to move into early production. We are delighted to have a great shareholder base. Looking at some of our major shareholders, Pangai Resources is owned by Paul Fudge, one of our directors. Paul is a very successful and highly experienced unconventional gas entrepreneur with experience in both the Queensland coal seam methane sector and the Northern Territory's Beetaloo Shale gas basin. Dale Elphinstone has been incredibly supportive over the last couple of years with substantial investments. Dale sat on the board of Queensland Gas Company for 9 years, which was an incredibly successful story for investors. Brian Sheffield recently joined our register following a placement we carried out earlier this year. Brian is a highly accomplished and successful US shale gas entrepreneur. He was the founder of Parsley Energy, focused on the Permian Basin in Texas, and has made very substantial investments across the Beetaloo Basin, including the acquisition of Origin Energy's interest in the basin quite recently. Energy and Minerals Group is a very large US resources-focused private equity fund, and Macquarie Bank have been both a lender to and investor in our company for a number of years. Moving to the next slide, I'll just provide a little bit of context on the Beetaloo. So the Beetaloo is not currently in commercial production, although we foresee that commencing in the next couple of years through our efforts and those of our neighbours. It is unequivocally the largest undeveloped gas resource in Australia. And indeed, to use the words of Andrew Liveris, the former chairman of Dow Chemicals and Donald Trump's energy czar, not my words, it is the third largest shale gas deposit on the planet. So this is an enormous resource. And it's really the reason why we are seeing a significant increase in activity and interest in the basin, and also government support, because this basin has the potential to resolve some of the critical gas shortage issues that we face in this country and more broadly across the region. We have an enormous resource within our properties. We have about 43 trillion cubic feet of prospective resource and nearly 800 million barrels of liquids resources, prospective resources. We are only really just starting to scratch the surface with our drilling in terms of the potential of this resource. But with limited drilling, we have already converted over half a TCF of gas from prospective resource to contingent resource. And we are now focused on converting that contingent resource into reserves, cash flow and production, following which we will then look to further develop our assets to the LNG scale that they can afford. Moving to the next slide, a bit more on our properties specifically. So we have a very large footprint across the Northern Territory's Beetaloo and McArthur Basins. We have around 29 million acres under lease. Uniquely across this basin, we have 100% ownership and operatorship of all of our assets. And we believe this provides us with significant flexibility around the pace of our development, the way in which we develop our assets, and ultimately down the track when we look to bring in a joint venture partner, we are obviously in a strong position in that regard. While we have acreage across both the Beetaloo and McArthur Basins, we are very focused on the Beetaloo for a couple of reasons. There is better infrastructure access, particularly pipelines, and that is where all of the activity across these shale basins is currently focused. The markets for this gas are likely to be as follows. So in the initial stages, there are local markets in the NT that are screaming out for new gas supply, particularly given issues around existing sources of supply from mature fields, both onshore and offshore in the Northern Territory. Further down the track, there will be the opportunity for the sale of gas to the East Coast, both through the Northern Gas Pipeline owned by Gemina, but also under MOU we've signed with the APA Group, Australia's largest pipeline operator, but also importantly through Darwin. So Darwin is already a major LNG export hub. There's the Darwin LNG project operated by Santos and the Ichthys LNG project operated by INPEX with their joint venture partner Total. So these are major petrochemical investments, tens of billions of dollars of investment, with ample capacity to add to their export throughput. Moving to the next slide. I just thought it'd be worth putting some of these resources into context. I should stress we're comparing prospective resources here with proved and probable and contingent resources, but these resources stack up really favourably against major global LNG export terminals based in Australia. So you can see there AP LNG's around 15 TCF, Queensland Curtis LNG around 10 TCF, Gladstone LNG 6.5 TCF. Those three projects underwrote around $50 billion of investment and have now made Australia really, brought a new wave of making Australia an LNG export powerhouse. And the resources that we alone have in the Beetaloo, let alone those of our neighbours, really see those pale into comparison. So we see ample opportunity for this basin to become the next wave of LNG export. And critically, the gas in the Beetaloo is extremely low CO2. Across the Beetaloo, typically the CO2 in the reservoirs are around 2 to 3%, but in our properties it's less than 1%. That compares to something like 15 to 20% in other assets around Australia. Moving on to our next slide, if we may. Clearly we are in a global energy transition. I think what the experience of the recent Ukraine war has demonstrated is how fundamentally reliant we are as a global economy on hydrocarbons. The transition will only occur if we move towards cleaner forms of hydrocarbons to provide the extraordinarily large amounts of baseload energy that we require as a global economy, not only for electricity generation, but also for transportation and petrochemicals. And gas plays a critical role in that. To that end, we've been really pleased to see very strong support from both the Northern Territory government and the federal government, both before and since the election. The Northern Territory government, as part of its Economic Reconstruction Commission, highlighted the critical role of gas. The NT government, under their new chief minister, has committed to getting the final recommendations of an inquiry into fracking in place by the end of this year so that production licenses can be awarded next year. We were the recipients of grant funding from the federal government under the Beetaloo Cooperative Drilling Program, which incentivises an acceleration of activity. And we've been following the terms of that contract and continue to receive rebates under that contract. Critically, the federal government has made a commitment to a significant investment in Darwin as a hub for petrochemical manufacture and LNG export and carbon sequestration, and that's around $1.5 billion. Furthermore, the Northern Australian Infrastructure Facility is set up in a way that can assist with the construction of pipelines going forward. So significant government support for this basin. Moving on to some of our recent successes. So we've been focused on EP187, which is on the eastern margin of the basin. And we've had some significant successes over the last few years. I would argue that we are absolutely amongst the most active players in this basin, if not the most active. We started off with shooting seismic in about 2019. That was followed by the drilling of our first vertical well, Carpentaria 1, which encountered an incredibly thick sequence of liquids-rich gas with very favourable petrophysical characteristics. That gave us the confidence to drill our first to carry out a fracture stimulation of that well. We fracked 4 different stages of the Valkyrie shales, which are world-class shale formations akin to some of the most productive US basins. And we got some very encouraging results from that. Consistent with the rest of the basin, we saw that the B shale was the most productive. And so on that basis, we drilled our first well, Carpentaria 2H, late last year, which was the longest horizontal well drilled in the basin to date. And critically, under our operating model, was done in a very cost-efficient manner. If you look at the costs being incurred across the basin, we really are the basin's cost leader by some significant margin. Typically drilling horizontal wells into the target formations for significantly less than other operators are drilling verticals for, let alone horizontal wells. We have since carried out the largest frack job in the basin to date, a 21-stage frack across that horizontal section of Carpentaria 2H with very encouraging results. We've shut that well in temporarily while we drill our next horizontal well, Carpentaria 3H. That well started drilling in the last week or so. The drilling's going really well. We've got through the hardest sandstone formation, Moroic, in record time. And now we will soon move into drilling the horizontal section of that well. That well will be twice the horizontal length of this well, so creating yet another milestone for the basin with twice the number of frack stages. This work is really all focused on starting to develop early type curves so that we can move into that early production. Moving into the next slide with a bit more detail on the recent flow testing of Carpentaria 2H. We achieved an average rate of 2.2 million cubic feet per day over the first 51 days of flow testing, a very encouraging result for our first horizontal well, with a peak rate of over 11 million cubic feet a day. And as I mentioned, that well is temporarily shut in, but we've got about another 40 days of flow testing that we will carry out post the drilling and fracking of our next well. We've been carrying out some pretty significant R&D activities on this well and utilising best scientific practice both from Australia and the US, and we'll be looking to optimise the completion of our next well, Carpentaria 3H, utilising the learnings of this Carpentaria 2H well with a goal of getting increased productivity per frack stage on that next well, consistent with the experience across the US basins. I've just got one final slide for you, which is a really important one, and that is really around our path to production. We believe that as a small ASX listed company, it's critical that we get into production as quickly as possible and with the minimal of shareholder dilution. And to that end, we are very focused on a plan to be in production within the next couple of years, focused on initial utilisation of existing pipelines, and from there we look to grow our production going forward. So thank you all very much for your time, and if there are any questions, I'd be very happy to answer them.
Thanks, Alex. Yeah, there are quite a few. There's obviously a few analysts and fund managers online. I know they're very interested in this Beetaloo Basin at the moment. You spoke about fracking. You mentioned you use 4 different types of fracking on the 21 stages in Carpentaria 2H. Did any technique stand out as being more productive than the others?
It's too early to share that data with our investors so far, but what I can say is that every shale basin is different. So there have been comparisons made to the Marcellus shale, which in many regards are quite fair comparisons, but every shale basin is different. And critically, the Beetaloo Basin is around 1 billion years older than the US shale basin. So what we're working on is cracking the code of which types of both frack design and perforation design and other factors that go into a frack job will give us that optimal outcome. We have started receiving some data, and we can see that some frack stages are contributing more prolifically than others, but it's too early for us to provide insights into how we may optimise yet, as we are still receiving the data that's coming in.
And there's another question here, Alex. Are you in discussions with H&P to use their special drill rigs? Do you still believe you'll be one of the first to develop and sell Beetaloo gas?
Well, there's 2 completely different questions. In relation to question 1, the answer is no. Where we are in the basin with our depths, we have ample access to the existing drilling fleet in Australia. My understanding, listening to some of the commentary from Tamboran, is that they are utilising that H&P fleet to be able to get longer laterals down at the depths they're at. As we've seen with the drilling that we have been doing and is ongoing, we have ample access to the horizontal lengths that we're looking to achieve at the depths we're at. And indeed, I think that was really demonstrated already in Carpentaria 2H, where we said to the drilling guys, we need at least a 1,000 metre horizontal section, but if you're confident with wellbore stability, please, see how far you can go. And they got an extra 350 metres with no troubles at all. That's given us the confidence from a drilling engineering perspective to take this next well to 2 kilometres. We do believe we can go further over time, but we're just taking it incrementally. In terms of plans to be first into production, we are very much focused on doing that. We, as this slide in front of you demonstrates, we're ticking the boxes to get that process underway. Our strategy is slightly different with that of our neighbour, who I understand are focused on 100 terajoule a day pilot development. We're really focused on a 25 TJ a day development utilising existing infrastructure. So slightly different strategies there.
And you spoke about government support. You've spoken about your MOU with APA. With the Northern Territory Government's infrastructure corridor strategy to Tennant Creek, what does that mean for Empire, and have you kind of had discussions with them?
Yeah, sure. So, ultimately, the development of this basin will require a cooperative approach to ensure that infrastructure development is done in the most cost-efficient manner possible. Because, I think a lot of lessons have been learned by a lot of parties from the development of the coal seam methane sector in Queensland, where there was significant duplication. So there were 3 sets of LNG plants built. There were multiple sets of pipelines built. Ultimately, the bigger you can build a pipeline, the lower the unit cost of getting gas through that pipeline. And I think that's where the NT government, particularly through the NT Gas Task Force, are showing significant wisdom to plan ahead in these regards and look to build, a single set of bigger pipes rather than multiple smaller pipes, which ultimately will bring down the unit cost and make the basin more economic.
And of course, recently in the Sydney Morning Herald, there was an article about the potential for a deal between yourselves and Tamboran. You've got some common shareholders. Is there anything you can comment on in that regard? Obviously, nothing too market sensitive, but just some general comments.
There's nothing I can comment on at this stage, I can assure you.
Yeah, sure, no problem. And then just finally on your current drilling program, can you talk to how that's improving your knowledge base on completions? And when you apply that knowledge, what kind of increases in flow rates could you expect to see?
Yeah, so from a drilling perspective, we're starting to feel pretty comfortable about drilling now. So, we work with Engage Energy, who are one of Australia's most experienced oil and gas consultancies. And we're really getting a pretty good understanding of the geology in terms of drilling. This is relatively easy drilling, actually, in the scheme of things. We're not going to huge depths. We're really starting to get a pretty good understanding of how to geosteer these wells through the target formations, particularly in the horizontal section. As I referred to before, really the critical element to driving economics in a shale gas basin is all around the way in which you fracture stimulate the wells. So that work is ongoing. As you referred to before, we've used 4 different types of frac fluids on our first well. We've also tried different perforation strategies across that well. We'll be applying those learnings into the fracture stimulation of the well that we're drilling currently. It would be remiss of me to speculate on the degree of productivity that we would increase that we would expect across each frac stage. But what I can certainly say is that we're already learning quite a lot, and we can see the potential for productivity uplift and also cost reduction over time, entirely consistent with the experience of multiple US shale basins.
Right, Alex, that's all we have time for. Fascinating story. We'll follow with interest, and have a nice weekend.
Thanks, Tim. Appreciate it.